Part 1. Don't live in what if. Smart traders. Focus only on the present. Have you ever looked at a chart and then said a very familiar sentence? If only I had bought here. If only I had held the trade longer. If only I hadn't closed the trade too early. The phrase if only is probably the most common sentence in the world of trading. After the price has already moved, after the opportunity has already passed, after the market has already given us a lesson that came too late. A trader sits in front of the screen, looking back at the past chart, and begins to imagine, if I had entered the trade back then, if I had held it a bit longer, if I had gone all in, inside their mind everything becomes perfect. A beautiful entry, a long wave, a massive profit. But that is only the illusion of the past, because once everything has already happened, every decision suddenly becomes easy. A past chart always looks very clear. A trend in hindsight always looks very obvious. But when you are living in the present moment of the market, everything is not that clear. There is news, there is volatility, there is noise, there are liquidity sweeps, there are fake breakouts, there are sudden spikes just to make you doubt yourself. And that is where the real psychology of a trader starts to reveal itself. Not when you look at past charts, but when you have to make decisions in the present. The ironic thing is, most traders do not live in the present. They live in an imagined past and an imagined future. They regret the opportunities that passed. They imagine the profits they could have made, and they forget the only thing that truly exists, the present. The market does not care about your past. It also does not care about your if only. The market only reacts to what you do right now, how you enter a trade, where you place the stop loss, how much capital you use, whether you have discipline or not. Those are the things that determine whether you survive in this game. A smart trader understands a very simple truth. You cannot fix the past. You cannot control the future, but you can control your actions in the present. And in trading, that is the only thing that has value. Imagine a very familiar situation. A friend messages you. This coin is about to fly. This project has insiders. An X3 or X5 opportunity. You open the chart. You see the price preparing to break out. Inside your head, a movie begins to play. You imagine the price doubling. You imagine showing your profit. You imagine a perfect trade. But the funny thing is, you are living in an imagined future while ignoring the present. You do not think about what position size is reasonable, where the stop loss should be. If the trade is wrong, how many % of your account you lose. If the market reverses, what you will do. All of those things are ignored because the human mind loves imagining profit, but it hates thinking about risk. And that is exactly where most traders start going wrong. Not because they lack knowledge, not because they lack indicators, but because they do not live in the present. They live in the illusion of profit. A new trader usually thinks trading is a game of prediction. Predict the top, predict the bottom, predict the trend. But a mature trader understands that trading is not prediction. Trading is risk management. The market is like a changing function. It is always moving. No one can know for sure what will happen next. You can analyze. You can estimate probability. You can find an edge. But the future is always uncertain. Therefore, a smart trader does not try to control the future. They control their actions in the present. They ask a very different question. If this trade is wrong, how much will I lose? Just that one question separates two kinds of traders, the dreamer and the survivor. Because in the world of trading, survival is always more important than making a lot of money once. A very simple example. Suppose you have $10,000. You enter a trade hoping to double your account. You go all in. You do not place a stop loss. You think, the market will definitely go up. If you are right, you might make a lot. But if you are wrong, one single trade can erase your entire account. That is how many traders end their careers. Not because they are stupid, but because they trade their present for an imagined future. Meanwhile, a professional trader does the opposite. They do not care how much this trade could make. They care how much this trade could lose. Maybe they risk only 1% of their account. $100. If the trade is wrong, the account barely changes. They still have ammunition. They still have opportunities. They still have tomorrow. That is the difference between gambling and trading. A gambler always thinks about the jackpot. A smart trader always thinks about survival. And everything begins with a very small psychological change. Stop saying, if only, and start asking, right now, what action should I take to reduce risk the most? That is the mindset of the present. No regret about the past. No fantasy about the future. Only focus on making the right decision in this moment. Because trading is not a game of perfect decisions. It is a game of controlled mistakes. A good trader is not someone who is always right. A good trader is someone who is wrong but still survives. And to do that, you only need one shield, not indicators, not a magical strategy, but risk management. Risk management is how you protect yourself from the uncertainty of the market. It allows you to make decisions in the present without being destroyed by fear. It helps you avoid saying the words if only. Because whether the trade is right or wrong, you are still in the game. And in trading, staying in the game long enough is the greatest edge. Part 2. The psychological trap of if only. The illusion of the past that destroys trader. Accounts. One of the most dangerous psychological traps in trading is not fear. It is not greed. It is the illusion of the past. After a big wave has already happened, after a trend has already formed, after the price has already moved hundreds of pips, suddenly everything looks very clear. Traders look back at the chart and say, the top here was so obvious. The bottom here was perfect. Anyone could see this trend line. But that is only true after everything has already happened. In psychology, this phenomenon has a name. It is called hindsight bias, which means the illusion that the past was always obvious. After an event happens, our brain edits the memory. We begin to believe, I should have seen it. I should have known. I should have taken the trade. But the truth is, at that moment, no one knew for sure what would happen. Think about a very familiar situation. You open the chart. You see a resistance zone. Price is approaching it. Inside your mind, there are two scenarios. It might break out. It might reject. You analyze. You hesitate. You wait for confirmation. Eventually, you do not take the trade. And then, price breaks out strongly. It runs 50 pips, 100 pips, 200 pips. You look at the chart and feel a very familiar pain. You say, if only I had taken the trade, if only I had held it, if only I had gone all in. But what you forget is, at that moment nothing was certain. Price could have fake broken out. It could have reversed. It could have swept the stop losses before moving. But because this time it moved in the right direction, your brain begins to create a very dangerous story, the story that you missed a guaranteed opportunity. And that is exactly where many traders begin destroying their accounts. Because after one, if only they start chasing the market, they enter late, they increase position size, they try to make up for the missed opportunity, and very often, that is exactly when the market reverses. This psychological lupus is very familiar. Miss an opportunity leads to regret, leads to enter late leads, to lose leads to regret even more. New traders get stuck in this loop for a very long time, sometimes for years, because they believe they are just missing one big opportunity, one correct trade, 1 times 10 trade, one life-changing trade. But professional traders understand a very cold truth. Trading is not a game of one opportunity. Trading is a game of thousands of small decisions. One trade does not matter. One day does not matter. 1 week does not matter. What matters is, are you still in the game after the next 100 trades? A very simple example. From 2019 to 2025, Bitcoin rose from around $4,000 in 2019 to over $100,000 in 2025. Many people look back at the chart later and say, if only I had bought, if only I had held. But go back to that moment. Bitcoin moved violently. Sometimes it dropped 20%, 30% in just a few days. There were times when the market was full of news about crypto regulations tightening, especially during the COVID-19 period. There were days when people believed this was just the final pump before the market collapsed. At that time, no one knew for sure what would happen. And even if you actually bought Bitcoin in the $4,000 to $10,000 range, Are you sure you would have stayed calm and held until $100,000? Because along the way, the market repeatedly made people panic, doubt, and sell. So, do not regret the past too much with the words, if only. The past always looks clear, but real trading always happens in an uncertain present. Focus on making the best decisions right now, because only good actions in the present can create a better result in the future. A smart trader understands this, so they do not spend time regretting missed opportunities. They understand that the market always contains new opportunities. Forex opens every day from Monday to Friday, moving through the Asian, European, American sessions. Crypto runs 247. The stock market has thousands of stocks to choose from. Opportunities never disappear, but your account can. That is why a mature trader never asks, "Why did I miss that trade?" They ask another question. If I had taken that trade, would I have managed the risk correctly? Because if the answer is no, then missing that trade was actually a good thing. Many traders do not realize a truth. Sometimes missing a trade is risk management. Not every opportunity is worth chasing. Not every wave belongs to you. And not every moment requires you to be in the market. This is something many new traders cannot accept. They think, if I do not trade, I am missing money. But professional traders understand the opposite. Sometimes the best trade is no trade, because every time you enter a trade, you place your account at risk. If you only trade when there is a clear edge, you are playing a probability game. If you trade constantly because you fear missing out, you are playing an emotional game, and the market always punishes emotion. That is why the if-only mindset is one of the most dangerous enemies of a trader. It pulls you into the past. It makes you believe you missed something huge, and it makes you act impulsively in the present. While smart traders always do the opposite. They do not look at the past to regret. They look at the past to learn. And then they return their focus to one thing only, the next decision. Not the previous trade, not the lost opportunity, but the next trade. Because in trading, the future is not decided by one big trade. It is decided by hundreds of small, correct decisions. Part 3. Why the trader's brain always says, "If only there is something very interesting about the human brain." It is not designed to become a great trader. Our brain evolved to seek rewards, to hunt, to avoid danger, to remember the things that make us regret. So when you look at a big wave that already happened on the chart, your brain does not see it as data. It sees it as a missed reward. And when a human being misses a big reward, the brain begins to create a very special emotion. That is regret. Regret is a very powerful emotion. It makes thoughts repeat again and again in your head. I should have had 200 pips. My account should have doubled already. I should have bought Bitcoin at $4,000. Then my life would be different now. And from there, the familiar sentences begin to appear. I should have gotten it. I let that opportunity slip away. I was so stupid to miss it. But the important thing is, the emotion of regret does not help you trade better. It only makes you make worse decisions. Because when you regret, you are no longer trading with logic. You are trading with emotion. Imagine a situation. You see a setup, but you hesitate. You do not enter the trade. After that, price moves very strongly. A perfect wave. You look at the chart and feel a sharp pain. Your brain immediately says, next time I have to enter harder. Next time I can't miss it. Next time I have to go in big. That is where everything starts becoming dangerous. Because the next trade has nothing to do with the trade you just missed. The market does not owe you anything. But your brain believes that. You need to get that opportunity back. And because of that, you enter faster. You enter bigger. You enter with less patience. You begin chasing the market. And that is exactly when probability starts moving against you. New traders often do not realize this. They think the market is teasing them. They think the market just gave them a chance, but they missed it. But in reality, the market does not have a concept of opportunity. The market only has price movement. Opportunity only exists in the way we see it. A mature trader understands a very cold truth. Every day in the market, there are thousands of opportunities, but not every opportunity belongs to you. A 500 pip move does not mean you must catch it. A coin going times 10 does not mean you must own it. A stock rising 300% does not mean you missed something. That is only market movement. If you try to catch every wave, you will soon realize a painful truth. You cannot. No one can. Even the best traders miss many opportunities. But the difference is, they are not obsessed by that. They do not look at the chart and say, if only. They look at the chart and say, where is the next opportunity? That is a very small shift, but it completely changes trading psychology. Instead of looking backward, you begin looking ahead. Instead of regretting, you begin preparing. Instead of emotion, you return to your system. Professional traders do not try to catch every opportunity. They only need to catch some opportunities that fit their system, like a hunter. A good hunter does not shoot at everything that moves. They wait, they observe, they choose the moment. And when they shoot, the probability of success is very high. Trading is the same. You do not need 100 opportunities. You only need a few good setups managed with proper risk. But to do that, you must overcome a very big temptation, the temptation to chase the past. Because the past always looks very attractive. It is like a highlight reel. Only the beautiful moments, only the big waves, no stop losses, no sideways days, no moments when the market makes you doubt yourself. But real trading is not like highlights. Real trading is very boring, very slow. Many times you just sit and watch the chart, doing nothing, waiting. And it is exactly in that boredom that many traders cannot endure. They want action, they want feeling, they want dopamine. And because of that, they begin looking back at the past, looking at the waves that already ran, looking at the opportunities that already passed, and saying, if only. But a smart trader understands one thing. The past is not the place where money is made. Money only exists in the next decision, not in the trade you missed, not in the wave that already ran, not in the things that already happened, but in how you act right now. And that is where the psychology of a real trader starts to mature, when you stop saying, if only, and start saying, in the next trade, what will I do right? Part 4. When if only turns a trader into someone who chases the market. There is something very paradoxical in trading. The biggest losses do not happen when traders have no opportunities. They happen after they miss an opportunity. Because right after saying the words, if only, the trader's psychology begins to change. They are no longer calm. They no longer look at the market with objective eyes. Inside their mind, there is only one thought left. I have to catch the next wave. And that is exactly where everything starts becoming dangerous. The trader begins chasing price. If before they waited for a clear setup, then now they enter faster. If before they risked 1%, then now they start increasing size. If before they were patient, then now they are afraid of missing out. And when a trader begins to fear missing out, the market almost always punishes them, because the market is very good at one thing. It rewards patience and punishes haste. A very familiar example. You miss an uptrend wave. Price has already moved 150 pips. You look at the chart and feel extremely regretful. You think, it still has room to keep running. You enter the trade, but because you enter late, the stop loss has to be wider. The risk becomes bigger, and then price starts to retrace. A normal pullback. But because you entered late, that pullback becomes a stop loss. Price hits your stop. You get kicked out of the market, and right after that, price continues moving. Once again, and you say again, if only. That is the loop many traders fall into. Miss the opportunity, chase the market, get stopped out, feel even more regret, trade even more, and in the end, the account starts bleeding. Not because the strategy is bad, not because the market is too hard, but because the mind has been pulled out of the present. The trader is no longer trading according to the system. They are trading according to emotion. The interesting thing is, the best traders in the world also miss opportunities, a lot of them. But they have a very different habit. They do not chase the market. If a wave has already moved, they let it go. If a setup has already passed, they accept it. If an opportunity is gone, they ignore it. Because they understand something very clearly. The market always has a next opportunity. Forex does not close forever. Crypto runs 24 hours a day. The stock market every year has hundreds of waves. You do not need to catch them all. You only need to catch a few waves the right way. A professional trader does not try to win every battle. They only need to survive long enough. Imagine a casino. Every day the casino misses many players, many games, many chances to make money. But the casino does not run into the street chasing players. It just sits there, calmly, waiting. Because it knows if it stays there long enough, probability will stand on its side. Professional traders think the same way. They do not run after the market. They let the market come to them. Setup not clear implies they do not trade. Risk reward not attractive, they pass. Signal not clear, they wait. And the funny thing is, it is exactly that patience that makes them earn more money. While new traders think that trading more will make more money, reality is usually the opposite. Trading more often only means making more mistakes. One of the clearest signs of a mature trader is when they begin to stop being obsessed with waves that already ran. They look at past charts not to regret, but to learn. They ask, why was this setup good? Why did the market react here? What lesson can I take from this? After that, they close the chart, return to the present, and wait. No emotion, no regret, no if only. Only one question. Does the next opportunity fit my system? That is the psychology of a smart trader, not the person who catches every wave, but the person who is not pulled away by the past. Because in trading, the past does not create profit. Only discipline in the present can do that. Part 5. When a trader chases a lost opportunity. There is a very familiar story in the world of trading. A trader sees an opportunity, but he hesitates. He waits for more confirmation. He thinks, let me wait a little longer to be sure. And then, price starts running. A very beautiful wave. Price moves in one direction. 50 pips, 100 pips, 200 pips. He looks at the screen and feels a very uncomfortable emotion. It is not a loss, but it hurts almost like a loss. It is regret. Inside his mind, one sentence keeps appearing. If only I had entered the trade. If only I had held the trade. If only. And from that moment, everything starts to change. He no longer looks at the market with calm eyes. He begins finding every possible reason to enter a trade. A small pullback, a green candle, a vague signal. Anything can become a reason. Because in his head, there is only one goal left, to catch back the wave he lost. But the market does not work that way. A big wave usually begins when very few people believe in it, and it usually ends when many people start jumping in. So, when a trader regrets and begins chasing the market very often, that is exactly the moment the wave is about to end. Price reverses. A deeper pullback comes. Stop loss gets hit. The trade loses. But that does not make the trader stop, because inside their mind there is still the feeling, I should have made money. And because of that, they continue trading. Trade again. Trade again. Trade with the hope of making back the opportunity they lost. And that is how many accounts are destroyed, not because of one trade, but because of one emotion of regret. In truth, the market did nothing wrong to them. The market only moved. It was their psychology that turned a missed opportunity into a chain of bad decisions. A smart trader understands something very important. A missed opportunity is not a loss. It is only a wave you did not participate in. The market does not lack opportunities. What is truly scarce is an account that is still alive. You can miss 100 waves. That is okay. You can miss a move that could have multiplied your account by 10. That is okay. But if you destroy your account, you will no longer have the chance to participate in the next wave. That is why a mature trader always asks a very different question. Not, how much can I make? But, how much can I lose? Because trading is not a game of prediction. It is a game of probability and survival. The market is like a changing function. It shifts continuously. No one can know exactly what the future will be. You can analyze. You can find an edge. You can have a system. But you cannot eliminate uncertainty. Therefore, a smart trader does not try to control the future. They only control their actions in the present. And the only tool that helps them do that is risk management. Risk management is not glamorous. It does not make you look like a trading genius. It does not help you show off huge profits. but it does one thing that is extremely important. It keeps you in the game. A trader with good risk management can be wrong many times, but the account is still intact. They still have opportunities. They still have tomorrow. While a trader without risk management only needs one big mistake to end everything. That is why, in the world of trading, there is a very cold truth. A successful trader is not the one who predicts correctly the most, but the one who does not destroy himself. And to do that, you must learn to let go of two very dangerous words. If only. There is no if only in trading. There is no should have. There is no wish I had. There are only two things that exist: decision and the consequence of that decision. A smart trader does not live in the past. They learn from the past, but they act in the present. Because money is not in the waves that already ran. Money is in the discipline of the next decision. And if you can understand that, you will no longer sit in front of the chart and say, if only. You will simply look at the market with calmness and ask yourself one simple question. In the next trade, what will I do right?